Hello, this is Brian Shannon from Alpha Trends Blogspot. It is Saturday, the 16th of December, 2006. We're going to go ahead and take a look at the markets, see how they close this week, and what might be ahead for the coming week as well for the major averages. Let's take a look first at the S&P 500. I've got the spiders up here, and we had seen last that the resistance right here at the 141 or so level had been taken out about a week and a half ago. That level was successfully tested as support, and we've seen a rally over the last week or so. And on a weekly basis, again, we see another extension of this just real vertical straight up market here, and it continues to frustrate short sellers, and it gets a little bit frustrating from the long side as well sometimes, because it's hard to look at stocks and say, should I really be buying into a market that's extended, or is there a greater risk of pullback? Which is why we always focus on the shorter term time frames for our entries, so that we can get involved in a market that's extended like this, and where I think risks are greater when it gets this extended for a sudden and sharp pullback that comes when nobody's expecting it. But we manage risk on the lower term time frames, and always keep in mind that we are in an overall bullish environment. So really looking for and shorting the market is pretty foolish in this environment, except for individual stocks that are in downtrends. We had seen earlier in the week that we had had a nice short sale in AMD over here and covered on this day right before the stock really took off. So it remains a treacherous environment for short selling, and in the individual stocks and in the overall indices as well. So on Thursday, we had seen the market take out this little short-term level of resistance at about 142.30, and on Friday we saw a pullback towards that level, and for now it seems to be holding. So I think that the important support for now, short-term, is right near this 5-day moving average. We'll just call it 142, and below that, then we've got this 140.75 level that's going to take on significance if that level's broken. Overall, though, the market still remains in a very bullish environment, and there's no reason to think that this is or there's nothing indicating that any toppy action. The Nasdaq is a little bit different, that we've seen what I consider to be distribution when we have that 10-day moving average cross to the 20. It just shows indecision. Whether or not it's distribution, we'll know only after when and if it breaks down below this 43.30 level that we've been keeping an eye on. And that takes on added significance because now the rising 50-day moving average is catching up to that level. What I'd love to see is a breakdown through that, close a day or two below the 50-day moving average, then a squeeze higher. A lot of people have been looking at this trend line, and I'm going to just continue to say that we had a break of that trend line, but it didn't bring anything any negative consequence. And trend line breaks are a lot of times a trap. They trap in people who've been looking for a top and use that as their justification to sell the market, when the market just then turns around and stuffs it right in their face. So on the Nasdaq, the weekly time frame, we've seen that the year highs back from January had been tested as support just a couple weeks ago, and that is the area that, again, about 43.25 or so, seems to be the more important level of support going forward over the next couple weeks. Now, on Thursday, I had said, with that big rally we had seen there, I said that nothing really changed except for a good day for the bulls. And the market came up to this level where we've seen a little bit of resistance near this 44.5 level. Friday, the market dropped below that 44.5 level. It didn't take out the lows from the afternoon trade on Thursday, but I would say that this level here, about 44.10, is an important level of support right now. And then, of course, we've got the 43.30 down below. The Nasdaq continues, though, when you look at this intraday time frame, it continues to look like a mess. The only good thing is that, on this hourly time frame, where each one of these candles represents 1 hour worth of trading, all these moving averages are heading higher, and it seems as though it's gotten a little bit more solid in here, but it's just at the top of a range too. So nothing to get excited about, nothing to be concerned about that I can see either. The semiconductors continue to chop back and forth, in this range here that they're in, and nothing really changed at all. It looks like they were able to close. Let's see, did it? Whether the 50-day moving average is 34.32, and we had to close at 34. 2026. So it closed below that. No big deal. But on a weekly basis, I guess it closed below the 50-day moving average. Not a big deal. It closed right around that 200-day moving average as well. This market just continues to be neutral more than anything. So we can't really read into it too much. Let's look for support on this semiconductor market down about 34.10 or so. And if that's broken, then look for a retest of these lows. Otherwise, we could see a continuation of this rally up towards that $35 level, which, again, the $35 level has had significance over the intermediate term. And it actually, if you look at it this way, this would, breaking above that would break this little series of lower highs and lower lows. But overall, semiconductors, I've got to say neutral in there. The mid caps, we had seen this market be really the stronger group when it broke past its resistance. And that resistance was tested as support. And on Friday, we were looking for, or on Thursday rather, we were looking at this 150.30 level as the area that it should have come up to and found a little bit of resistance. Unfortunately, here we'll look at a 10-minute time frame. Unfortunately, we had some selling there that followed through on Friday, and now the market's back below the 5-day moving average. It closed right on its lows too, so this is a little bit concerning. I do think that there will probably be the potential for support to be found near 147.50, and a break below 147.50 could open up a bigger problem. And here, if we look at this hourly time frame, we've got this little trend line in here now. But breaking below that 147.50, the recent lows from last week, then perhaps we're going to drop down a little bit further, and that might put into jeopardy this breakout, in that we've had a lower high and then a lower low. But again, we've got a rising 50-day moving average, so it's innocent till proven guilty. I wouldn't get aggressively short if it does break down there. Instead, I would be looking for a move down towards 145.5, 146, and then think that there might be a entry from the long side down near there. Now, as far as open positions go for stocks, we had been involved in POM, and this stock we gotten involved in at $26.40. So I guess that's right about there. And we got stopped out on Friday with a gain of 48 cents right over in here. The other positions that we had were Royal Gold, RGLD, and Royal Gold we had gotten involved in at $33.15 right in here, and after that little pullback. And I had suggested raising your stop to 33.70, so we got stopped out of there at 33.70 on Friday. After the stock had made a little move, but it really came down hard. Gold got hit on Friday. But we got stopped out of there with a 55-cent gain, so not bad. And we were also in Goldfields, symbol GFI, at $18.05. And I'd suggest raising your stop to break even, so you should have been stopped out of Goldfields at break even.